welcome to the Capital Discussions. This is a special webinar with Himanshu. Jim will be joining us a little bit later. Before we get started, a little disclaimer, the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. We believe hypothetical computer-simulated trades are accurately represented. However, actual profit or loss may vary due to market factors, such as liquidity, slippage, and commissions. And our disclaimer is on the bottom of all of our web pages, if you care to read it in full. So with that out of the way, special guest today, Himanshu. I've known Himanshu for quite a long time and always been impressed with the calendar trades I've always seen him do and the directional acumen, especially using Woody CCI. There's not a lot of people in the world that are as good at it as Himanshu is. So it's always nice to have him talk about directional clues and how he's trading calendars. So welcome, Himanshu, and I'll pass the ball to you so you can share your screen.
Okay.
Okay, you've got it. And I see your desktop.
Okay, there's not much on my desktop right now because essentially we are going to be talking about the service per se. Most of you probably know about calendars. Most of you probably hate calendars as well, which is okay. So one of the things that Jim and Tom and we decided was that since a lot of people don't really understand calendars and don't really like them, with the exception of Dino, who actually does like them, we would start a service similar to Amy's Weirdo service. Tom will talk about the appropriate infrastructure and all the things that we have in place for you guys down the line. But in brief, let me tell you something about the calendars that I will be recommending. They won't only be, by the way, in the big indices like SPX and NDX and RUT and all these kind of things. Of course, they will be mainly our bread and butter trades. But there are quite a few opportunities for calendars, even in stocks and ETFs. For those of you who don't know, or may not know, is the fact that I am essentially a technical trader, so I actually look at the charts with a certain set number of indicators, and based on that and the likely probability of the underlying moving in a certain directions, I will be recommending, either a short-term calendar, which will be anywhere where the front month or week, although let's just say the days to expiration for the short calls or puts will be anywhere between 20 to say 40 days. And then these are what I call the income calendar. You just keep on doing them and keep on making your 10, 15, 20, 30, 40, 50%, depending on what you are doing. For example, for those of you who can, by the way, can you all see my screen?
Yes, it's fine.
All right. So, these are some of the calendars that I have two more, which I have not really added here because one of my virtues is laziness, and I try to do as little as possible, and keeping track of my trades is such a boring thing. But I eventually do get them all in here, and right now these are the current calendars that I have on. One good thing about the calendars also is that unlike the Weirdo, where you may need at least $20,000 to $21,000 for putting on one Weirdo, here we have a significant leeway. You can, if you want to put 10K in a calendar, you can, but if you just want to put 2K or even 1K in a calendar, you can. I personally prefer to do calendars where I put in less money, but I do more calendars. So, in essence, I may have, say, maybe 6 or 7 calendars going on simultaneously, and together, all those calendars, the total debit on all those calendars, and maybe even after some adjustment or two by converting them into a diagonal, the overall margin requirements for all 6 or 7 calendars may be less than $30,000 or $40,000. So you can scale this up any which way that you would like. So one of the things that we will be doing are the income calendars, where, as I said, the days to expiration will be anywhere between 20 to 40, 45 days. And then there is another category called the wealth calendars, where the days to expiration for the short calls or puts will be way out, like maybe 2 months, 60 days, 65 days. Sometimes if the signal is really good on a weekly or a monthly chart, then maybe even 70, 75 days out. These are the calendars that I actually like. As I just said, laziness is a virtue, and I am famed. Of course, my wife would say infamous, as opposed to being famous for being lazy. But being lazy is something that has actually worked for me when it comes to trading, which is why I also call myself a type Z personality and not a type A or a B or a C personality. So somebody like Dino, actually, that's why I like to trade calendars now, because he's probably the only other person I know who's lazier than I am. Admit it, Dino. By the way, I'm already getting a question. Rahul is saying, would you also recommend what price we should buy, sell the calendar when you send the trade? Of course, yeah, I will tell you. Sell this call, buy the other call for an approximate price of, say, $9.70, give or take maybe 5 to 10 cents. And then you put the trade on and you leave it on. At least give it an hour before it gets, if it doesn't get filled in an hour, then, give the market maker maybe 5 or 10 extra cents. You don't have to, keep on changing the price every minute. Just leave it on and walk away, come back half an hour later or do other things, trade other things. So let's go back. So now again, as I was saying, we will also be doing a lot of calendars in stocks. And one of the other things that we had decided, Tom and Jim and I decided yesterday is that for those of you who actually sign up today, you will get a full 3 weeks of trial instead of 2 weeks, because in reality we'll be starting around the 1st of March, but you get this week free, and if anything shows up on my radar, you will get an email right away. Same thing with adjustments. When an adjustment is required, I will send you an adjustment by email and by SMS, text, telling you exactly what you need to do. Most of the trades that I put on by default for myself, the debit will rarely be above maybe, say, $6,000 at the most. That's just the way I like to do them. One of the other things that I believe, Tom, you had suggested was that I will actually have one of my own paper money accounts dedicated to you guys, so I will actually be putting a trade in there as well. Now, just so that you know, there are certain rules by the SEC and the FINRA and all these regulatory bodies, which actually state that if I am telling you what to buy, then I shouldn't buy it before I tell you. Because then, if I say buy this out of the money call in Amazon, and then suddenly, so I buy it first, and then you all buy it, which, if you may be only about maybe, 100, 200 of you, but let's suppose that you were 1,000, 2,000 of you, then that would push the price of Amazon up. In which case, my calendar, which was put on first, will benefit. So in this case, we have decided that I will actually send out the recommendation by email and text first. And I'll then wait for about 10, 15 minutes before putting the trade on myself. That way, you will all know that I am actually getting the same price as you guys are getting. And when I actually show you the trades as they are progressing, we will more or less have an identical current P&L, negative or positive, depending on what it is. And ML is asking me something else. Can you talk about how and why you use the Woody's CCI? I already talked about the how yesterday for almost an entire 45 minutes, but I will tell you about the why. The why is because it works. The signals are very clear. Really, you can't say that, oh, I'm not really sure whether this is a ZLR or not. It is, they are easy to identify, easy to see, and well, one other thing is that not too many people use the Woody CCI as a full-blown methodology or a trading strategy. So, the less people use it, the more, the better it works for us. So I think that is one of my beliefs. On the other hand, I also use other indicators like moving averages and MACD and stochastics, and those work too. One good thing about most of the technical analysis and the way my rules are set up is that many a times you will see that I'll say, okay, go long Amazon or buy this call calendar in Amazon, and you will buy it, and maybe next day or very early the day after, I may actually send out an email saying, get the hell out. Because for example, if we are getting a signal on Woody CCI, then we want the CCI indicator itself to move in the same direction as the price. We also, or at least I personally also have a mental stop loss. So let's say if Amazon is at 300 and we put on a 310 call calendar, but if Amazon goes down to say 293, if that is my stop loss, I will send out an email saying, get up. So there are times when there are times when we will have some losses of, like minus 0.2% or maybe minus 1 or 2%. But when the prices are moving in our direction, as you can see, we may have P&Ls of 59%, 69%, 70%. In fact, just once in my entire calendar, no, actually not just once this year, but many times before, because of our roles, we will reach a stage where we will recover all the money that we spent in the trade. In other words, we will recover the debit. And then our calendar will literally be in a stage where doesn't matter what happens to the underlying, we still walk away with a profit. Even if something like 2008 happens and there is a huge move for whatever reason because of some, Russia invading Ukraine or Greece getting out or interest rates increasing or the Homeland Security Department being shut down because there's no money to pay for them, whatever it is, even if things go to hell in a handbasket, a lot of times we will have reached a stage in our calendars where it doesn't matter what happens next, we cannot lose, which is the ultimate goal that we want in most of our calendars. And thanks to weeklies, we now have what is called more roles than before. Once in a while, you will also get a calendar that is very different. It'll be what is called one of my stock replacement strategies, where the stock is good, the fundamentals of the stock are very sound. There is, technically, it tells me that this could go up significantly. The only problem is that we don't know in what time frame. In which case, I may recommend a trade where you may be buying leaps 9, 10, 11, 12, maybe even more than 12 months out. And against that, we will keep on selling calls as well. So we will have something that starts out as a simple calendar, could turn into a debit diagonal. If the prices move against us, it could turn into a credit diagonal as well. But we will, and again, one of the things that I will be doing is what is called a weekly recap. Once a month, the weekly recap will be live, where we will be going through all our trades that are ongoing, maybe even some of our other trades where we lost money and what else we could have done to lose less kind of things. At other times, so once out of 4 weeks will be live, the other 3 weeks will be a recording that you can peacefully look at over the weekend. At least that is the initial plan. Who knows? If people prefer a live recap, then maybe we will just do a live recap for about half an hour every now and then. Oh, there's more questions. Bogdan is saying, missed the presentation yesterday. Would CCI adaptable to all time periods? If not, which time periods work best? Would CCI, as I showed yesterday, it literally works anywhere from a 5-minute chart to a weekly chart to a monthly chart. The parameters that you use are different, but from anything from 5 minutes to 1 hour, you use a certain set of parameters, and beyond 1 hour to 4 hours or dailies or weeklies or even monthlies, the parameters are slightly different. And by the way, not only does it work on different time frames, the CCI, the Woody CCI indicator actually works on just about any underlying. I have traded futures with it. I have traded Forex with it. I have traded ETFs, especially currency ETFs, especially while the euro was going down, the CCI was giving us some very nice signals. In fact, let me show you, since we are on the topic of CCI, and since everybody is interested in it, what's the ETF for the euro? I believe it is FXE. See, there you go. We have been short in the euro since more or less 7/22/2014. Now, of course, we would not have been short all the way through. As the price is coming down and the CCI is going up, maybe we went short here and then maybe got out somewhere over here. We went short here again, maybe got out here. But using options and slightly out of the money or even in the money options, we more or less know that more often than not, we will be making some significant profits. And that's why by the way, sometimes I like to leg into my my calendars. So for example, on an up day, the puts are less expensive. So I may ask you to buy a long-term put on an up day, and then after a couple of down days, I may send out an email saying, okay, now against that long put, buy this short put. This way, we now are actually reducing our overall debit. So we are, the goal is to use as little money as humanly possible to make as much money as we possibly can. That is the goal that I actually set out to find for, to achieve for myself, and that, which is something that I have succeeded in doing over the last few years, and hence the service itself. You guys might want to take advantage of that as well. So where were we? Yeah, so there will be many trades coming along, but rarely, by the way, just as in this particular case, for example, the stock of this thing called OAS is like $15 or $13. Most of the times, I will not be recommending calendars on stocks that are that small. I mean, if a stock is $15, you might as well just buy 500 shares, and that will be equivalent to buying a long-term calls for a calendar. Most of our stock will be approximately $80 or higher. Most of the stocks and ETFs that I will use will also be extremely, extremely liquid. liquid stock-wise as well as options-wise. In other words, large volume of shares being traded every day, as well as a significant amount of open interest and volume in the options themselves. So think Apple, which actually occasionally has even more option volume than the spiders sometimes, which is nice. That is what we want. So yeah, these are the income trades, and one of the other income trades, and what I'm also, what most people actually, those of you who have known me for a long time, may have heard about my triple calendars. So once in a while, I will gladly, as a bonus, throw in a triple calendar recommendation as well. Usually it'll either be Google, IBM, or Goldman Sachs, or XLE. I like to round myself off by having my finger in many different sectors simultaneously. That way, in case, like when oil went down, the transportation sector was booming. So if XLE is losing money or we are having a hard time keeping afloat, we can still make more than enough money on some other sector, thereby mitigating our losses or lack of profits, I should say, in some other sector. The other one is the wealth calendars. These are long-term calendars where again the debit is very low, and we have so much time before the expiration of the front month that we sold that we not only do we have enough time to adjust accordingly if things move out of whack, but the probability of actually making money on these trades is very, very, very high. It's almost like a high-prob iron condor kind of thing, but using calendars. So you may want to call them high-prob calendars as opposed to the income trades, which are like low-prob calendars. And here is another question from Ray. Hey, Ray, how are you doing? Are you willing to start with a calendar and if needed, convert to a diagonal? Of course, anytime. But remember, again, most of my decisions are based on technicals. So if I think that the underlying is now going to start moving in the opposite direction and continue in that direction for longer than a day or two, then yeah, I might definitely convert a calendar into a diagonal. But most of the times I prefer not to do that, or at least do it once where the spread is maybe 5 or 10 points only. Because remember, if the spread between the short and the long keeps on increasing, then your margin also keeps on increasing. And suddenly your $2,000 calendar has now a margin of like 20K. If you are, if the spread between your long and your short is like 30, 40 points. Another question from Samir. Do you send out the rationale behind any adjustments in terms of technicals or Greeks or both? The recommendations, remember, in a text message, you don't want me to give you a full-blown explanation because by the time you read the actual adjustment itself, I would like you to put the adjustments on as quickly as possible. But in the weekly recaps, I will actually definitely say why I did what I did and why I told you guys to do what I did tell you to do. Oh, yeah, I'm on chat, Marilyn. That's why I'm seeing. That's how I'm seeing the questions. Ray says thank you. You are very welcome, Ray. Any other questions?
There was this one from Donald. What effect does change in IV have on the calendars?
Well, it depends. If the IV goes up, that's good for us. If the IV goes down, it's not so good for us. But usually when the IVs go down, what happens to the underlying? It moves up, right? But that's okay because we are positive delta traders. Always, always, always positive delta traders. And again, this is based on technicals. There are, for example, this FXC that I just showed you would have literally started out as an out-of-the-money put calendar. It would have had negative delta, positive theta, and positive vega. Which is why when the markets go down, all the three Greeks actually help us. And if we have a put calendar while that particular underlying is going down, we make money a whole lot faster, which is why, as I was saying the other day, I'm hoping that, I'm hoping that the Homeland Security does get shut down, because then the markets will really react and drop like a rock, in which case we'll make a lot of money. I really shouldn't say that because, Lord knows how many people will get hurt and not get paid when these sort of things happen. But essentially, we make sure that from a technical perspective, we are positioned properly. If the technical signal is negated at any given point in time, you will hear from me saying, get out. We may be down by maybe 2% and I may ask you to get out, or we may be up by 6-7% and I may ask you to get out. Because the stop loss that I had set for the trade before we put it on will be, what is the word I'm looking for here, will be honored, or at least I will honor it. You may choose not to, that's up to you. Jim is saying, can it be followed end of the day? The majority of the time, I will be sending out the adjustments and the recommendations right like about an hour before the market closes. So you can put either the trade on or the adjustment on in that last 1 hour. But sometimes, as we know lately, over the last couple of years, while the market has just kept on going up and up and up and up and up, just recently in last October and December, the markets suddenly turned around and dropped like a rock. And I was like, yay, finally we are going to make some more money. And then suddenly turned around and went the other way. So when something like this happens intraday, when suddenly we have a 2 standard deviation move, then I might just send you a signal when I actually see it happening right there. It is very possible that even if you execute what I asked you to execute at the end of the day, things in the long run may still work out fine. But I will actually, especially during a fast-moving market, I might actually send out a recommendation or an adjustment as I see it happening in real time. So you may get something at like 9:45 a.m. in the morning too. I mean, if the market gets down, and by 9:45, if we are already down by 1.7 standard deviations in the RUT or SPX, such a thing may not really happen in, say, something like XLE, but it might in something even smaller than XLE like FXE. FXE actually, gapped down quite a few times in the chart that I just showed you. And somebody just came on the phone. Who's that, Jim?
Jim.
Yes, sorry about that. I had another meeting that I just finished up. Sorry for being late, guys.
Oh, no problems. I'm getting some very interesting questions, and I am trying my best to answer them. Jim is saying, what win percent are you trying for? Well, I'm trying for a 100% win percentage. I want every trade that I make to be a winner. I have yet to reach that level. But it doesn't really matter, because when we lose, we will be losing a whole lot less than the times when we actually make money. I presume by win percent, that's what you are asking. If you are asking for what percent P&L I'm looking for in the short-term trades, like let's say if I say, buy something, sell something 2 weeks out and buy something a month out, it could be just maybe 5 or 6%. If it is a trade where our days to expiration is almost 40, 45 days away, then it could be 15, 20%. And if our trade is a wealth trade where we are starting, say, 2 months out from expiration, 2 months, so the short calls or puts are 2 months away, then we are looking at anywhere from 20 to 30 to 40%. I have actually, the highest that I have reached in a calendar, in a long-term wealth calendar is about 69%. But again, one of the things that I will tell you in the recaps is that a lot of times we get hung up in the P&L. We say, oh, it's a calendar, and I learned that on average I should make 20% on my calendars. That's not true. In our case, what we are going to do is we are going to have very rigid rules of entry and exit, and we are going to have very flexible expectations about the profit percentage that we will take, as opposed to the other way around. And believe me, I have been at the other end where I'm like, oh, it's a calendar, I have to make my 20%, and then I wouldn't, and then I would, lay it out on somebody else, like, oh, but you said that this is the way it should be. This is the market. Understand this one thing. This is the market. If it gives you something, take it, be thankful, and move on. We are the beggars here, okay? And beggars can't be choosers, as they say. So sometimes we may make just 3 or 4%. After having made like 50 adjustments, then we say, you know what, this ain't working well. Let's just get the hell out. And maybe if you include the commissions, you just broke even, or maybe are even down by maybe 1%. But that's okay, because when you do make the money, like for example in some of these trades as you see in the screen, this SPX was a short-term one where I already made 12%. And by short-term I mean, it's going to expire in 2 days' time. Friday morning actually. So today is what, Tuesday? Yeah, 2.5 days. Okay, next question is when does the service start? The actual service will start after 5:30 p.m. today if I happen to find a stock that meets one of my technical criteria. You may hear about it first thing tomorrow morning. Again, as I said, for those who join today, you will have 3 weeks of a free trial. And again, we are, all 3 of us, Jim, Tom, and I, we are, very flexible people. If in the next 3 weeks we don't really get too many signals, and you say, you know what, I still don't know whether I should join or not because, we have had just one calendar so far. And if you say, why don't you give me a couple more weeks, who knows, we just might. Other than that, hold on. Where do we sign up? Well, that you'll have to talk to. Tom actually put something there already.
Yeah, that's where all they need to go to.
Okay, so yeah, that is where you sign up. a.capitaldiscussions.com. A should be Z, Tom, not A. So the next question is, will you send out messages describing the next potential adjustment points? Yes. Actually, that is a great idea. Once we put the trade on, I will let you know beforehand that our adjustment point is around this price level. So, if you are watching, then you also know that if the price is coming closer to that level, then you should be expecting something from me around that point in time. But we will also be doing in the recaps, the weekly recaps, and especially the recaps, the live recaps once a month. There you can ask me as many questions as you want as to why we did what we did. I'll tell you without trying to give out too much of my proprietary information, but enough that you will actually understand why I'm doing what I'm doing, and in case you are on your own down the line in the future, at least you will have a reasonable idea of what to do all by yourself. I don't want you to get, to I want you to learn about how to trade calendars while you are earning from the calendars as well.
Hey,
I will
Himanshu, how much
recommend,
capital should
sorry,
people plan on if they're going to follow your trades?
pardon me?
How much capital should people have if they want to follow along?
Yeah, that's the next one. As I just said, the trade, so for example, I may say buy 4 calendars, meaning 4 contracts for a calendar, because that 4 contracts may come to approximately maybe anywhere between $4,000 to $6,000. But that is just my take. If you have $1 million that an account that you are trading, which is $1 million, you can take that 4 and turn it into 40. That's up to you. I would suggest that if you are new to calendars, when I say 4, you put on 2, just to be on the safe side. Just so that you understand, just so that you can get the hang of what is happening, it is better to start small. A lot of our calendars in the stocks will be 2 contracts, maybe 3 contracts, and overall you may be spending maybe about $500-600 on it, because I would rather put on 10 $500 trades and have 8 of them win, as opposed to put one $5,000 trade and have it lose. Make sense? And again, as I said before, we will be putting trades in different sectors at different times. So if one sector goes down, the other non-correlated sector may be moving up and making us money, and vice versa. Or maybe in one sector that is going down, we may have a put calendar trade, and a sector that is going up may have a call calendar trade. And in a sector or two where not much is happening, we may have an at-the-money calendars, and we may even go with a double or triple calendar. So we will sort of, yeah.
Oh, I'm sorry. Please, I was just going to ask you the next question. I thought you were done answering. I apologize.
Yeah, I'm done. In fact, I was about to say, and the next question that I see here is...
How many trades, right? How many trades a month? And also, there was some stuff before this in terms of capital allocation for each of the programs. Do you have a capital amount as a minimum that you would end up looking for either the income or the wealth?
Most of the calendars, the price of an individual calendar that I will send out will rarely exceed $11.70. So, if you put one contract calendar on, you will be spending $1,100.70, the maximum that you can spend on a one contract calendar.
Okay.
Based on my own, so again, if like Amy, as I was saying before, I will have a small paper money trading account as well, where I will be putting these same trades on. So this is a good time, and I would like to ask all the folks who are on the chat right now, like, would you like me to open up an account which is only $20,000, or would you like me to open up an account that is $2 million? And based on that, I would recommend you what you want.
Yeah, I think just from an educational point of view, it's always easier to scale up. I'd love to see whether that number is 20, 25, 30, whatever that number is. I'd rather see you do that on a small amount so that this way, and if everybody knows that you're basing this off of a $50,000 account and I only have $25,000, I know I'm going to take your trades and I'm going to do half. Okay. So I think that doing whatever the right number is that you're comfortable with in terms of how you would end up doing your normal management, as low as you're comfortable with, is where we should end up starting. And this way everybody can end up understanding their risk. Now, the one thing, and I know that you guys have already talked about this, is that with calendars the way they are, most of the time, they're going to move a little bit slower and they're going to be easier to manage. Most of the time. However, you know, the thing is that we can't end up making any guarantees that you know, during service, it's going to end up behaving like most of the time. So there is the possibility that things can end up moving pretty significantly. So, everybody that's doing this, especially, if you haven't done this before, please do not invest money that is your life savings, or you can't end up affording to take, significant drawdowns during. I know that it probably won't end up happening, but in the off chance that we do have, these, very significant type of moves, I don't want people to end up being caught off guard on that.
Right, yes. But let me expand on that particular topic. For example, as the question says, how much of the capital to allocate to each trade? One of the things that you will learn, especially in those weekly recaps and the weekly live recaps, and if you guys want, maybe, once in a while, we can just go berserk, and on a Friday evening or even on a Saturday, we can just, all of us get together for an hour or 2 or 3, and you can ask whatever questions you want. But one of the things, even if you do not learn anything else from me, one thing that I want you to walk away learning is what is called risk management principles. So when you ask me the percent capital to allocate for each trade, the amount that you expect to lose, and and this is another thing that you should really be aware of. Every time you put on a trade, just expect to lose on that trade. Start out with that expectation. And then when you don't, and even if you break even, you will feel much better about yourself in the first place. But my point is this. Normally we say that in a calendar, especially in the big calendars like the RUT and SPX and NDX and all those things, we strive for a maximum of 20% loss. That's the max loss that I'll take. In other words, if my calendar costs me $1,000, and if I'm down by $200, I'm out. So if whatever capital allocation that you want to use, you need to put in enough capital allocation such that if you lose 20%, that 20% makes up no more than 1% of your portfolio. This way, in other words, in the example that I just gave you, this $200 should be 1% of your portfolio. At the most, maybe 2% of your portfolio, but never more. This way, even if the market shuts down tomorrow, you are like, well, okay, fine. So I am going to lose $200. No problem. Even if something really bad happens, and I don't know, the way the world is in right now, something bad is about to happen. I'm almost certain of it. And it is going to affect us in some way, shape, or form. So that is why I will actually be teaching you in the recaps and in my detailed emails about how much to put in there. That capital allocation thing is a formula that you need to learn and learn well, and then use it based on your own account size. And I will be doing it in the paper money account that I'm going to set up with, say, $30,000, and I will actually be doing it in the weekly recaps. I'll be showing you, saying, okay, I have $30,000. 2% of 30,000 is this much. Therefore, I'm willing to lose this much on any one trade at any given point in time. And based on that amount that I'm willing to lose, I'm going to put on a calendar with 6 contracts and no more. Sometimes if it is a $80 stock, it could be 23 contracts. If it is SPX, maybe it is only 2 contracts. You get the point? So we will be going over all that. In fact, we'll be going over all that before I start out sending the emails to you guys, so that you understand what I'm trying to say, and don't put on if you have a $20,000 account, don't use $18,000 on one calendar. That's like putting your one and only egg in your one and only basket, and then suddenly somebody steals them both. Then you're really screwed. And here's a long one from Day Donald. Need to change text on the website. Okay?
I already did it. Yeah, I already took care of that.
Okay. What was the text on the website?
Oh, I was modifying some of the text that Amy had used, so there was actually a reference to the weirdo on there, so I fixed that.
Oh, really? There's a reference to a weirdo. Interesting. Interesting. I have to look at my Word doc. I'm sure there is the word weirdo is ain't there, but who knows?
Not there, no.
So, okay, so Donald, Tom has changed the text, and thank you for pointing that out. Share details of how to minimize the downside. Oh, Tom, this was you, wasn't it? You took that paragraph and cut and pasted it. Instead of putting up what I told you to put up.
Kind of the other way around. I took the code from Amy's and then just was replacing your text with the stuff that was on her page, and I just missed that one word. So sorry about that.
Okay, no, that's fine. It's good to know that we have people around us who are willing to, gently
And Himanshu,
criticize us.
how many trades a month? I mean, we talked about
I
capital.
would say a minimum of 2 trades, a maximum of 6.
And
this could be a combination.
That's for each.
Right. So for the wealth thing, it will be no more than, it'll be about 2 trades and only 2 trades in the ROT and SPX, maybe occasionally in the NDX or SPX PM, but it'll be 2 at the most 3 trades. In the other one, which is the income calendars, it could be anywhere from 2 to 6.
Okay.
And again, at least 2 of them will be in the ROT and SPX, and the other 4 will be in some stocks that are giving us good technical signals to go long or short.
And because you're going to end up using a paper account with whatever number you decide, right, 20, 25,000, people will end up being able to see that in terms of, oh, okay, he's only putting on this much, and they'll know that they'll have capital in reserve in case you're going to end up doing more trades.
Correct. Yes. That's a good idea. In fact, what I may do is, what we may do is, well, we will look at that later. I can just put up a screenshot of the trades that are on every night. But I think just doing it once a week should be enough. But we'll see. I mean, depending on what the folks who sign up want to see, we are very flexible. This is all I do for a living, so if there are times when you want to shoot me an email or give me a phone call in the middle of the day and say, hey, I'm thinking of this calendar that you haven't recommended, but I think it should do well, feel free to give me a call, no problem.
One of the other questions here is if somebody's trying to decide between the two, how could they end up deciding? I know you're going to say both, but what characteristics, if I was looking for trying to decide in terms of how active I would end up trading, or what my I'll call it my personality, my trading personality, which one would be better suited for one versus the other?
Yeah, I mean, if you are as lazy as I am, then the wealth is better. But remember, wealth is like, we are starting 60 to 70 days out. So you may make more, but it'll take more time to make that more. In the income trades, you may make less, but you will have more trades. So in the long run, as far as making of money, the amount of money that you will make in both services is more or less the same. But when you talk about the risk reward will be the same on both of them because they are all calendars. So, if the risk will be the same 20%, whether you are putting on an extremely short-term calendar or whether you are putting a very, very long-term calendar. The risk will be the same. The rewards will also then depend on, sometimes when you give the trade more time, you actually end up making a much bigger reward than otherwise. One other thing that I'm also going to be doing is that, especially in those midterm, like the ones that started around 40 days out, we may start with, say, four contracts, but when we make 10%, we take 1 contract off. When we make 40%, we may take 2 more off, and then let the last one ride to go all the way to, who knows, 40, 50, 60%. Or not, depending on you, but I will definitely tell you, okay, get out of 1, get out of 2 more, get out of the final one. We can, and then again, if you want to follow exactly as I do it, that's fine. If you just say, hey, I made my 10% and that's all I'm looking for, I'm just going to get out of the whole calendar right now. And sometimes it's good, if you make 2%, if you make 10% in 2 days, I too would be more inclined to just take everything off and say, hey, let's just celebrate what the market just gave us and go drink a Guinness.
Okay, one of the things I'd also end up suggesting, if you're not sure of the two, that's what the trial period's for. Sign up for both of them, see which one is better suited for your style of trading, and go with that one.
Absolutely.
That's true, yes, okay.
And there was a question, do they need option software like O&E or Option Viewer, or can they just use POS?
You won't be needing anything, no. I personally use TOS most of the times. I started using Option and Explorer because it helps me to keep track of my P&L. So if somebody says, well, how much did you make last year? I can look at him and say, my entire account went up by 78.6%. Yeah, Rahul is already asking about how to cancel. So, yes, you got to talk to Tom. Yeah, Tom handles all this sort of administrative stuff. He's good at it. He has the patience for it too. Most of the time, my time will be spent in scanning the universe of appropriate stocks to find the right trades for you guys. And as I said, once in a while I may actually hand out a triple calendar or one of the stock replacement calendars as well. And that's why even if we may have 20, 30K in the account, we will never use, we'll probably use maybe about 50% of the account will be in use at any given point in time.
And like I put in the chat, there's a, you can also send an email to support at Capital Discussions to cancel if you need to, or I'm building a client area that you can actually manage your subscriptions on your own. So either way would work. And Donald's asking, is there a track record from last year that they can see? Similar to Amy, she had like all of her P&L for each month.
I have the track record for all the trades that I did this year. Last year I was traveling a lot, so I did not put on, since I'm a technical trader also, I don't put on a trade just because we are X days from expiration, which is something that works very well with iron condors and with iron butterflies and those kind of trades, because you are mainly depending on theta to make your money. In this particular case, since we are also depending on delta to make our money, I want to make sure that we can put on a trade when we get the signal that it's about to move in an upward or a downward direction and place a trade accordingly, which is why I have this wide variance of days from expiration. There may be days when we may put a trade on with only 20 days from expiration, and sometimes we may not get anything happening, and I may go to the weekly charts, and if I do get a trade on a weekly chart, that's when we'll be going 50, 60 days out. So because it is based on technicals, there is no fixed time period. Therefore, I can't very well even show you and say that I did exactly 12 calendars last year, because I didn't. But also last year I was traveling a lot. I was in Amsterdam, I was in Las Vegas a few times, I had to go to Colorado, busy with other things. So many a times I literally, quite a few months, literally the whole summer, I don't think I put on a single trade. Just for my own sanity, of course. If you are at an airport, airports in Europe actually have good Wi-Fi, but most airports in the U.S. don't. So you could get in trouble.
And also, Himanshu, I know you can't share this, nor can I, but from some of those cities that he mentioned, I know that he was actually doing some professional work for some large funds, and they didn't let him trade while he was doing that work for them.
That is another thing, yes. I was working as a consultant to some wealth management firms, and while I was legally their consultant, they would not let me put on trades in the same underlines that they had, and since they had trades in more or less most of the damn underlines, I was sort of left on my own.
And to everybody, don't bother asking him what the firms was, because I signed the same non-disclosure he did, and we can't tell you.
Yes. They're the big one, yeah. They have $4 billion under management. Yes, any other question? In addition to the alerts, is there a list of currently open trades and trades done to date as part of the ongoing service? Once the service starts, yes, of course. In fact, once the service starts, I'm going to ask Tom to see if we can have an ongoing trade log page where we can literally say, okay, trade 1, Amazon, we made minus 4%, trade 2, SPX, we made 7.12%, whatever it is, and, keep that, or maybe just put up an Excel spreadsheet, I don't know, whatever, something that will let you know that this is all we have done, these are our results, and Brad, it's you, so if you really want to know how well we did, you can always call me up, and I'll tell you.
Yeah, we could definitely build that into the class page. It's not a problem.
Right, yeah. So, yeah, that shouldn't be a problem. And not only that, I mean, some of you may learn, by the way, one of the other things that I want to offer, and I haven't even talked to Jim and Tom about this, if you sign up today, then as Jim pointed out to me yesterday after the CCI class, he said, you were going so fast that I couldn't even see where you were pointing. So I'm going to redo a Woody's CCI class, a total technical trading strategy class using Woody's CCI, which could be anywhere from an hour to 3 hours, and including Q&As, it could be maybe 4 or 5 hours. So if you sign up today, you get that for free.
Wow, that's great. Thank you, Himanshu.
No problem. Free bonus. Do you take into account stock earnings? Of course I do. I own a lot of stock. Yes, we take into account stock earnings, and we try to put on calendars, 2, 3, 4 weeks prior to earnings themselves, because as we go into the earnings, the walls increase, which help us. Except with IBM. Well, actually now we should. Lately, over the last 3 years, every earnings, IBM drops by $10, and then by the end of the day, it moves up by $5, almost consistently every single time over the last 2-3 years. So now that we know what IBM does, we can just buy a put. And then after earnings,
I shared with Himanshu. During 2013 and 2014, IBM earned the distinction of being the first company to be the worst performing stock in the Dow 30 since Bethlehem Steel. So that gives you an idea of the trajectory that they're on.
Some of the folks are very young, I think in their mid-20s. I don't believe they have even heard of Bethlehem Steel, so you might want to give them a little bit more information about.
Well, see, that's the whole thing. You've never heard of it, so you know where they ended up.
So you can imagine how bad IBM's reputation is right now, which is good for us. Remember, when the stock really drops like a rock, our put calendars will make more money than our call calendars ever can. So I'm sincerely hoping that something happens at a macro level, which will bring the markets down, and we start getting some negative technical signals. Then we'll have a real blast.
The single best thing that I know I personally felt about calendars is that if you're a condor, a weirdo, or a butterfly type trader, when we get those market events, and I know that they haven't happened for years now, but you get these market events where the volatility starts to end up exploding, the market starts moving all over the place. The calendars, because of the way the vol structures normally end up working, become much easier to manage. Instead of doing these, multiple, 3-4 leg trades where you're taking things off and moving them around, and it's like next to impossible to get them to be executed. The vols, the way they're structured normally in the calendar, they're much easier to end up managing. And during those times of stress, having simpler trades to be able to end up doing adjustments, having to make your adjustments not nearly as time sensitive, make them, I think, easier for most traders to end up handling. The challenge that a lot of people have is that because of the difference in the term structure, right, that you're short 1 month, you're long another month, or weeklies, a lot of times they don't understand how that ends up working. And you do have to end up trading them for a long period of time to be able to become comfortable with that. You can either be a PhD mathematical quant to be able to end up figuring all this stuff out, or you can end up having the experience on the underlyings that you trade. And I think that as you go through this, you'll end up seeing that the people that become calendar traders end up like them a lot more because of the way they are. Granted, it takes a while to get there, but I do think that in the long run, I like the statistical advantages that calendars can represent if managed properly.
Yes, very true. And Dino says that even he who owned a no calendars t-shirt started trading my style of wealth calendars.
Brad, we miss your sense of humor. Okay.
No, not Brad. Oh yeah, Brad. Yes. And oh yeah, he's an honorary Greek. That's true. He's from Delaware, right? He's an honorary Greek. So the other thing is, before what time? Oh shoot, we already spent an entire hour. Tom was going to sort of just give you guys a way, show you how you can access these trades and videos and all the rest of the stuff pertaining to this particular service on the capitaldiscussions.com website. So Tom, do you want to take it away?
Sure. I can just do that quickly. Let's see.
I will give you, okay, you took the controls already, good.
Yep, I can do that. So after you log into the site, if you go to classes, as soon as I enable the tags for you, you might have to log out and log back in, but you'll see the income and wealth calendars. Depends on if you've done the combination or one or the other. Then there's not much there right now because Himanshu hasn't uploaded anything, so there's just a couple of tabs. If you ask a question, you can send a question this way, and it'll go right to Himanshu. And the notifications are for the alerts. So right now, I'm receiving the email alerts, but I'm not receiving the SMS alerts. So if I wanted to get those, I would just click the green button, and that would enable them. Now, to get the SMS alerts, you do have to make sure that your mobile phone is in your profile. So actually, I'm showing all my information here, so be kind. My mobile phone number, and this is where you would put yours in. So as long as you have that phone number in and you have this that says that you are receiving, you will get alerts. Now, other tabs that will be showing up, I'll just go to Amy so you can see a few of them. The library will be some recordings, so after any pre-recorded videos that Himanshu uploads or live webinars will be in the library tab here. And you can also access those from the main library, but this is all kind of one-stop shopping. Any trade messages that he sends out via email and SMS will show up like this, and you can control how many you see. Documents that you upload will also be available, and individual files or recordings can also have files attached to them, and I'll show Himanshu how to do that. And there's a few other things, like once you schedule live classes, then there'll be a calendar tab on here, and that's basically, there's also another one for trade images, so you can upload images, like screenshots, annotate them, and document them, upload them, and it'll show up on a tab here for trade images. So that's basically how you access it. So just go to classes and then click on whichever one you have access to or both, and that's where you're going to get all the information. And then for the, if you need the link later and you forget where it is, if you go to the blog, the public site, you can always go to the product Himanshu's calendar trade alerts, and that takes you to this page, which has all the information, and then the order buttons for the income trades, the wealth calendars, and the combinations. So that's how you get to them. So kind of short and sweet. And I'll make a recording of this and post it in those class archives just so you have it, so you can always go back to it. Let me see if there's any questions. Yeah, it is set up, and I was doing some updating in Infusionsoft ML, so I'll get that. I saw your order, so I'll have that set up probably in a few minutes after this webinar is over. The format for the mobile number, U.S. numbers, you can use 123-456-56789, or you can use the parentheses. It's pretty good at figuring out U.S. numbers. If it's an international number, it has to have a plus, and then the country code, and then a space, and then numbers and dashes. So that's the format for the mobile phone numbers. Okay, you're welcome. And any other? Oh, and I do like baklava. See that? So that.
I thought that meant he was just borrowing money from Germans.
Oh yeah. Well, yeah, the Germans are. I don't think they're happy about loaning money to most countries.
Very true.
So that's pretty much it. I don't want to take up too much time with that. That's a high-level overview of how it works. So, and we can add in another tab again for trade history. I think that's a good idea.
Okay, yeah, that's a great idea. We should have talked to Brad beforehand. Any other questions? Feel free to ask whatever you want to ask right now, or forever hold your peace, they say.
Or send an email.
Or send me an email. My new email is himanshu@capitaldiscussions.com, so feel free to send something there, no problems. I shall, of course, reply at my convenience. Remember, laziness is a virtue.
Thank you, everyone, for attending. We really appreciate it.
Can you also export the trade on one? Sure, you can. If you want me to, the trades that I do it, yeah, sure. I believe
yes,
this was recorded, right?
It is being recorded, yes.
I actually do trade both strategies in the same account. So yeah, you could. I mean, they're all calendars. Just make sure that, with the same underlying, you don't get confused and do an adjustment for the income trade when it was for the wealth trade, or vice versa.
Right.
All right, guys, we will see you all soon. Until then, have a great time.
Yep, absolutely.
Thank you, everyone.
We'll see everybody probably tomorrow or Thursday. We've got 2 good guest speakers this week coming up.
Oh, yeah, okay, good, very good. All right, see you all. Bye.